Good day everyone, welcome again to another episode of Basic Transfer Pricing Philippines. Today we'll discuss to you the disclosure of related party transactions in the financial statements. Because once there is a related party transaction, it should be disclosed in the financial statements. Okay. So disclosure of related party transactions in the financial statements. There should be disclosure. The relationships between a parent and its subsidiaries shall be disclosed, irrespective of whether there have been transactions between them. So whether there is transactions between related parties, the relationship of the parent and the subsidiary should be disclosed. An entity shall disclose the name of its parent and, if different, the ultimate controlling party. If neither the entity's parent nor the ultimate controlling party produces consolidated financial statements available for public use, the name of the next most senior parent that does so shall also be disclosed. Because in some cases there are requirements on the preparation of the consolidated financial statements between related parties. To enable users of financial statements to form a view about the effects of related party relationships of an entity, if it is appropriate to disclose the related party relationship when control exists, irrespective of whether there have been transactions between the related parties. Why? Because if there is a related party transactions, then the user of the financial statement can form already a view that there is something different in this kind of financial or commercial transactions as compared to that between independent transactions. The requirements to disclose related party relationships between a parent and its subsidiaries, in addition to the disclosure requirements in International Accounting Standards 27 and IFRS 12, disclosures of interest in other entities. Paragraph 13 of International Accounting Standards 24 refers to the most senior parent. This is the first parent in the group above, the immediate parent that produces consolidated financial statements available for public use. So it should be disclosed. And in some cases, the SEC or the Securities and Exchange Commission are requiring these related parties to submit to them consolidated financial statements. An entity shall disclose key management personnel compensation in total and for each of the following categories: the short-term employee benefits, the post-employment benefits, the other long-term benefits, the termination benefits, and share-based payment. So I can see there are so many transfer pricing issues that arise from this share-based payment or stock options compensation. Disclosure requirements are in addition to those in paragraph 17 of International Accounting Standards 24. So the disclosures requires the amount of the transactions, the amount of outstanding balances including commitments, their terms and conditions including whether they are secured, and the nature of the consideration to be provided in settlement, the details of any guarantees given or received, the provisions for doubtful debts related to the amount of outstanding balances, especially the related parties, the expense recognized during the period in respect of bad or doubtful debts due from related parties. So these are also the disclosures under BIR Form 1709 that should be attached to the annual income tax return of the corporations. The disclosures required by paragraph 18 of IAS 24 shall be made separately for each of the following categories. Also, should be disclosed separately. And the parent or the entities with joint control of or significant influence over the entity, of the subsidiaries, associates, joint ventures in which the entity is a joint venture, the key management personnel of the entity or its parent, and other related parties. So they have to be disclosed separately and not just in a lump or joint disclosures. They have to be disclosed line by line as a line item in the disclosures. Examples of transactions that are disclosed if they are with our related parties: the purchases or sales of goods, finished or unfinished, the purchases or sales of property and other assets, the rendering or receiving of services, leases, transfers of research and development, transfers under finance arrangements, including loans and equity contributions in cash or in kind, provision of guarantees or collateral, commitments to do something if a particular event occurs or does not occur in the future, including executor contracts, recognized and unrecognized, settlement of liabilities on behalf of the entity or by the entity on behalf of that related party. Participation by a parent or subsidiary in a defined benefit plan that shares risk between group entities is a transaction between related parties. Also, disclosures that related party transactions were made in terms equivalent to those that prevail in arm's length transactions are made only if such terms can be substantiated. Items of a similar nature may be disclosed in aggregate except when separate disclosure is necessary for an understanding of the effects of related party transactions on the financial statements of the entity. So these are the requirements for the disclosures in the financial statements of the related party transactions, as required, and especially now that the BAR requires a BAR Form 1709 to be attached to the annual income tax return. So we have to be prepared and make these disclosures in the financial statements. So this is all for today. Thank you and have a good day.